Hello everyone. There is an important development that is happening in the market today and you need to be aware of. As you know, there is a meeting tomorrow for the Fed and it is expected that the Fed will cut the rate. This will be the first time to cut the rate since the COVID times, since around 4 years. The development that is happening, I'm sharing here what is called the Fed Watch. This is by CME. If you just Google Fed Watch and you will see the probabilities for 0.25% cut and 0.5% cut. So this is the probabilities that are in front of us here. And as I shared with you in the video in the weekend, the probability increased. And today, actually, it is 65 to 35%, 65% for 50 basis point cut and 35% for 25 basis point cut. In the weekend, it was 50-50. And actually, when the CPI report come, it was 75-25. We can see it down here. So 1 month ago, it was 75% for 25 rate cuts, 25% for the 50 basis point cut. And 1 week ago, it was 66 for the 25 basis cut, and then 38% for the 25 basis cut, and then 35%. So you can see 75, 66, 38, and 35. And the percentage of course, the 50 basis point cut is increasing. Today it's at 65, 35%, which means the market is pricing today that the Fed will cut the rate by 65% probability. Okay. I think, based on what I have seen from Jerome Powell during the last couple of years, he was too late to raise the market and cap the inflation. So that inflation went to 8 to 9%. And many reporters and analysts are saying he's too late to cut the interest rate. We should have had a cut in July. Today we are in September. We're still having the first cut tomorrow. And he's always saying he needs to be database, he needs to get confirmation, he needs to see several points, he needs to see a trend line. So the guy is like very much fan of the fundamentals and the charts. And I'm just afraid that tomorrow he will not give the market what the market wants. The market now is pricing 65%, and I'm afraid that he's going to give the market only 25%. So what will happen if that happen tomorrow? I think the market will go down. Okay, so you can make some preparation for this, and you can make some plan for this. Like what? If you are using a margin, for example, just reduce your exposure. Don't be in the margin while you have such condition, while you are expecting that tomorrow will be, maybe we'll have a bad day. So don't be in the market tomorrow with the margin. There are also some easy decisions that you can take. Like what? Like, for example, if you have a stock that is break even, just get out of it. If you have a stock that is 1-2%, you made 1-2%, and it's like going flat, just go out of it. If you have a stock that made even 7-8% and started to go down, just go out of it. So these are easy decisions that you can take. You will be left with the big winner and with the big loser. The big loser, you might want to think that you can cut your position. If you are having like a losses of 0.51%, just cut these losses. 1-2%, you might think about cutting these losses. Okay. And for the big winner, you can also think about cutting your position as well and cashing your profit. These are all some easy decision. If you want to go to some tough decision, you can, but you can wait. So I'm not saying go out completely out of the market, be in, but just reduce your position. If you are leveraged, go out of the leverage. If you are 100% in, just reduce your position. It is always better to protect the downside. if the mark if this was wrong and the market was looking, for example, on soft landing, and they are thinking that now this is the start of the cut, even if it's 25, it's a start of the cut and the market will go up because they are expecting soft landing, even with a 25 basis point cut, then you can go back again, no problem at all. Tomorrow is the meeting at 2 p.m. The announcement is at 2 p.m. CET time, US time, and what's more important is the press conference by Jerome Powell at 2:30. So it is, if the market conditions were good and you were happy with the market condition, just go in again. There is no problem at all. Okay, but the toughest thing to do is to be there with 2x or 3x or 4x, yeah, 2 times your portfolio with a margin, and then you start going down. Then instead of like losing 2%, you lose 4%. Instead of losing 3%, you lose 6% because of the margin. This is what you should avoid. Also, if you are like 100% in, so instead of losing 3% on the total portfolio, just make it lower. So the first thing to make a profitable trade is to protect your capital, protect your profit. Don't let the losses creep in, and don't make a large loss. So that's the rule for the trading, and that's a very important rule. So just be ready for that and make sure that you don't have high exposure in the market tomorrow, just in case the market went down. I hope this is not all going to happen. I hope that the Fed is going to meet the market expectation and cut by 0.5, and everything is going to be nice and beautiful, and we all celebrate, we are all happy, we are all winning. I hope so as well, but we should plan for the worst. Okay. All right. I hope tomorrow will be a good day, and I hope you make a good plan for that. Thank you very much, everyone.